Now on Overnights,
I believe in reason and common sense.
Leith Van Onselen from Macro Business with the Treasury of Common Sense.
Common sense never goes out of style.
Macrobusiness.com.au. Check it out every day. We do. There's so much good information there. And Leith Van Onselen from Macro Business joins us every Thursday morning. You well, mate?
Yeah, good. Thanks, Luke. How about yourself?
Yeah, not too bad at all. We got those national accounts yesterday, and this is something you've been talking about for some time, and I've heard people refer to it in the news coverage yesterday, and of course already today. We find ourselves in a per capita recession. What does that actually mean?
Yes, that's right, Luke. Look, the national accounts yesterday were a bit of a dumpster fire, to be quite honest. They were a very poor set of numbers. Basically, the economy went up by, the GDP grew by 2.1% year on year, so in the year to June, which sounds okay. It's not great growth, but it's okay. The problem is the population grew by 2.4%, and what that means is that although the economy grew, it didn't grow by as fast as the population. What it basically means is everyone's slice of the economic pie has shrunk, and it's actually fallen, for two consecutive quarters. So it fell. Per capita GDP growth, so your slice of the economic pie, fell by 0.3% in the June quarter, which follows a 0.3% fall in the March quarter. So that basically means we've had two consecutive quarters of negative per capita GDP growth, per person GDP growth, and basically it's what they call a per capita recession. So if anybody out there reads that today, that's what they're talking about. Basically, your slice of the economic pie is shrinking, and it's shrunk for two consecutive quarters, which fulfills the definition of a recession. And look, the actual internals to that were quite bad. The household consumption spending in per capita form terms is actually falling now, so that's turned negative, which it's not really a surprise. We've had rising interest rates and obviously wage growth. We've had negative real wage growth. The other disturbing thing was the household saving rate has actually fallen to its lowest level since 2008. So basically, households have been confronted with these very high interest payments, and basically that's caused them to have less disposable income, and at the same time they've had negative real wage growth, and what's effectively happening is they're pulling back on their savings, and they're also spending less, and that's basically the reason why the economy has hit this per capita recession. It's all been driven by households who are really struggling. Yeah. And the other scary thing to come out of the national accounts was that it showed that Australia's population has actually grown by an absurd 620,000 people in the 12 months of June, which is an all-time record. So at the so the federal budget that came out in May tipped that this calendar year that the population would grow by just under 500,000. Well, according to that, it's grown by, according to the ABS, it's grown by 620 odd thousand in the last 12 months, and we're on track to probably 650,000 this year, which is absolutely already blown apart the federal budget's predictions. And that's basically the reason why we've got this, really disturbing housing crisis at the moment, rental crisis, because we've got an unprecedented influx of people into the nation right now.
So we have an increase in our population in a year of 600 and how many thousand?
620,000, just over that, 623,000 according to the national accounts, which is just absurd. And just to check this, I thought, this doesn't sound right. I really should check this. So I went and checked the ABS's population clock. So basically, on the Australian Bureau of Statistics website, they have this population clock, and it ticks over every day, and it basically estimates what the population is. And I compared that to what it was at 31 December last year, so at the end of the year, and that shows that Australia's population has actually grown by about 460,000 this calendar year so far, and we're only at the start of September.
Goodness
me. 460,000. We've got nearly 4 months to go, and
wow.
The federal budget predicted that this calendar year that the population would grow by about just under 500,000. So we're going to smash the budget's forecast, and they came out in only May. Yeah. Which is why I think we could be looking at 650,000 population increase this year, which is absolutely insane, and that's the highest in history. Last year was the highest in history at 500, and we're probably going to get about 650,000 this calendar year.
Wow!
So if anybody's wondering why I've got a rental crisis, that's it.
Exactly. Something you and I have been talking about here for weeks and weeks and weeks now. And the other thing you've been talking about for years and years and years now, population. What that number means is that we're spending less, we're using more of our savings than we have, and we've got a smaller share of the pie than we've had. Is that all right?
Yeah, spot on. But the economy in aggregate, so in total, the pie is still growing slowly because of just fire hose so many people into the country.
Yeah.
And those people obviously, work and spend, etc.
Mm.
But everyone's share of the pie is shrinking. So it's kind of a bit of a false economy we've got at the moment. And it's a way for the federal government to say, oh, look, we've avoided recession, the economy's still growing, we're great economic managers, when really all they've done is just fire hosed and record numbers of people into the country, and that's causing, of course, all these other problems. So
yeah,
the problem facing households going forward is multifaceted. So obviously got this massive population growth that's causing the rental crisis, etc. The other problem is that although the Reserve Bank of Australia has stopped raising interest rates, we've still got mortgage rates going up because we've got still hundreds of thousands of people that are rolling off these cheap fixed rate mortgages onto variable rates. And that's going to continue for another 6 months. So effectively, the picture facing households is still continuing to worsen because their average mortgage payments are going up still. So they're going to have less money. Inflation's still running higher than wage growth. So the real wages are falling. And at the same time, because of this massive flood of people coming in, that's not only just pushing up rental prices, etc. That also means that the unemployment rate's now rising because the economy's not growing fast enough to soak up all the additional workers. So we're going to have rising unemployment as well. Jeez. So it's basically a formula for degraded living standards, basically, is what the federal government's running here.
Yeah. Now, you wrote through the week for news.com.au about the inflation war, except that where many people think, perhaps the war is done, long live the king, whatever they say, you don't believe the inflation war is over, do you?
No, I don't. Look, I still think the Reserve Bank's probably going to keep rates on hold, but they'll probably be, remain on hold for longer than most people are thinking. So basically the financial markets and most economists think that they'll start cutting them. They're cutting rates early next year. Hopefully that'll still happen. But the problem with it is we've still got pressure points in these certain areas. So the first one, which we've talked about the last couple of weeks, has been we've still got rents are rising very quickly because of this massive population immigration drive that the federal government's doing, and that rents is basically the single biggest driver of the CPI, and that's going to keep rising for several quarters, and that's going to keep putting upward pressure on inflation. But the bigger problem at the moment is, and anyone who's filled up their car would know this, petrol prices have rocketed. So in the last month or so, petrol prices have basically gone to about over $2 a litre. In Melbourne, they've just dipped slightly below $2, but they were at $2.20. And basically, we've had this upshift in petrol prices. So petrol, in late June petrol price had fallen 20% annually. Now they're up 20% annually because we've had this big bounce. And what that means is that that's going to now factor into the inflation rate directly because obviously, petrol is a component of the CPI. It's a fair share of what people spend, but also indirectly, if firms etc. start passing on these costs in their prices, whether it's goods or services, so you could get a second round inflation impact. And the risk is that the Australian dollar has fallen quite heavily. So the Australian dollar has fallen to about 64 US cents. It's fallen very sharply in the last few months, and that's kind of behind this petrol price rise because it's an imported good. If the Australian dollar falls, it becomes more expensive and the price goes up. The problem is we're likely to see similar kinds of inflation across a lot of imported goods now, and that'll feed into the consumer price index. And what it means is that the Reserve Bank could be forced to keep rates higher for longer than they would have otherwise. So it's just another little curveball that's been thrown at us in the last month or so. And I still think the Reserve Bank's probably going to keep rates on hold purely because we've got such a weak economy at the moment. We've got unemployment's starting to creep higher. There's all these other factors that should stay its hand, but at the same time, it probably won't cut rates as fast as what I thought previously and what others thought because of this petrol curveball that's been thrown in there,
Gotcha.
unfortunately. So,
Gotcha.
look, I mean, this could all change next month, Luke, but that's just the sort of reading it now based on what the petrol price are doing right at this moment.
Gotcha. Macrobusiness.com.au. Check it out. Leith Van Onselen, excellent as always. Good to catch up, my friend. Talk to you next week.
No worries, Luke. Thanks very much.